You've heard of Bitcoin. Your friend almost bought it in 2012. Your dad says it's a scam. Twitter says it's freedom. So what is it actually? I explain here what it is, why people care, why people hate it, and whether you should. Let's go. Bitcoin is digital money, but not like your bank app, not like PayPal, not like Venmo. It's money that lives entirely online, isn't controlled by a government, isn't issued by a central bank, runs on open source code. It was created in 2009 by someone using the name Satoshi Nakamoto. Nobody knows who that is. Not a joke. We genuinely don't know. From day one, the idea was simple: money without a middleman. Normally, when you send money, bank verifies it. Bank updates the database. Bank can freeze it. Bank can reverse it. With Bitcoin, the network verifies it. There's no single company running the show. It runs on something called a blockchain. Think of it like a giant public spreadsheet that everyone can see, anyone can verify, nobody can secretly edit. Every transaction ever made is recorded forever. It's transparent, it's decentralized, and it's permanent. If you mess up and send it to the wrong address, there is no oops button. Here's the part that gets people excited. Only 21 million Bitcoins will ever exist. That's built into the code. It cannot be changed unless the entire network agrees, which is extremely unlikely. Compare that to normal money. Governments can increase the money supply. That's part of how modern economies work. Bitcoin, fixed supply. That's why people compare it to gold. Gold is scarce. Bitcoin is digitally scarce. That scarcity is a huge part of its value. So how are new Bitcoins created? Through something called mining. Not with helmets and pickaxes. Mining is when powerful computers compete to solve complex math problems. When they solve one, they confirm transactions, they add a new block to the blockchain. They earn newly created Bitcoin as a reward. Over time, that reward gets cut in half, roughly every 4 years. This is called the halving. So new supply slows down over time. Less new supply plus fixed cap equals more scarcity. That's the theory. Now let's talk about volatility. Bitcoin's price moves a lot. Why? Because it doesn't produce earnings like a company. It doesn't pay dividends. Its value mostly depends on what people believe it's worth. When hype explodes, price surges. When fear hits, it crashes. Bitcoin has had multiple huge drops in its history. It has also recovered from major crashes before. If you can't handle seeing your investment drop fast, Bitcoin will test your mental stability. A lot of people think Bitcoin is secret spy money. It's not fully anonymous. It's pseudonymous. Your wallet isn't automatically tied to your name, but every transaction is public forever. If your identity gets linked to your wallet, your history can be traced. So no, it's not invisible magic crime money. Supporters say Bitcoin protects against inflation because supply is fixed, removes reliance on banks, allows global transfers without permission, can't be easily controlled by a single government, is digital money built for the internet era. They see it as financial independence. Critics say it's extremely volatile. It's mostly speculative. Mining uses significant energy. It doesn't produce cash flow. Governments could regulate it heavily. They see it as risky and overhyped. Both sides have arguments. Neither side has a crystal ball. Would you like to buy it? Here's the adult answer. Bitcoin is a high-risk asset. It has delivered massive gains in the past. It has also delivered brutal losses. Mainstream financial advice usually says, if you invest in high-risk assets, they should make up only a portion of a diversified portfolio. Not your entire net worth, not your rent money, not your personality. So what is Bitcoin? It's decentralized digital money with a fixed supply, secured by a global network, wildly volatile, deeply debated. It's software plus economics plus human psychology. Which means one thing, it's unpredictable. And anyone who tells you they know exactly where it's going is either guessing or selling something.